So yesterday I had a meeting with a new client who got badly burnt over the past few years, which is why he's now coming on board with us. He got badly burned with just listening to doom and gloom sayers, and I wanted to. So I thought about it, and I was like, how am I going to sort of make a bit of a video on a lesson on this? And I guess there's a couple of words, and I'll show you one chart as well, how you can quickly kind of get over this. The reality is that fear sells, right? So newsletter writers, look at any of your typical headline news on most news channels. Fear sells, right? That gets the emotions going, and it gets people to pay attention and watch. And unfortunately, it's the same thing in the stock market, newsletters and that kind of stuff. So a lot of the doom and gloom stuff, I would urge everyone to basically ignore. Now, let me be very clear. It doesn't mean that there's no truth to any of these things. There's always an element of truth, I think. Maybe not always, but a lot of times. And indeed, some of these doom and gloom scenarios, whatever they are, they could happen. It's not impossible. But a lot of times, what happens from an investment and trading perspective, if people get into the mindset of these doom and gloomists, is that they take on extreme positions. And if you go back and look at the doom and gloom sort of newsletter writers and that kind of stuff, and you look back at the track record over the past, say, 10 years or so, you'd see that most of them have been terribly wrong. A lot of very big names out there. I don't want to name any names, but you can probably do the math and kind of look at that yourself. So one easy way to kind of get around this is to understand that, listen, if the market really does turn sour, there usually is time, and that's why we have this top-down approach to make us understand that. And I'll show you guys one little chart. It's a very simple one, but it's one chart that I think you watch this chart and you can get a lot of a lot right. So usually this is the VIX, the S&P 500 volatility index, okay, and usually if the VIX spikes above 20 and holds above there, it has a decent chance of going to 30 on average, right? If things line up. But more importantly, and this is the much more important point, if the VIX pushes above 40 and even tickles 50, it usually is a good sign that the market is in a bottoming phase, at least, right? In whatever time frame that is. And so that's usually a good spot to start nibbling on sort of longer term positions. Again, this is I admit it, this is oversimplifying it, but also from a newsletter perspective, you can bet that these bears and doom and gloomists, this is where they start to get really loud. Here, this is where they get really loud. Just the most recent example was just this past January, February. A lot of these doom and gloomists, they really got loud if you look in Twitter and YouTube. And so I would urge you to not pay attention to that. Now again, I'm not telling you that there's no element of truth of doom and gloomists when it comes to the market. Again, anything can happen, and ultimately a lot of these people are right ultimately. But you can be wrong for a long time. And so my client that I just acquired, he came to us because he was basically of the opinion that the financial system is about to collapse again. And listen, for all I know, that could happen again. I don't think so, but I'm just saying, hypothetically speaking, just from a trader's perspective. And so what he did is he simply just basically didn't buy any stocks, sold all his stocks about 5-6 years ago, and lost on a lot of opportunity, right? And the reason he did that is because he listened to one specific doom and gloomist that really just kind of captured his attention a little bit too much. So anyway, I don't want to make this a much more of a rambling video than it already is, but I did want to kind of just draw your attention to that, because I do feel like a lot of people have too many gurus, and a lot of people usually do have a guru or so that's a bit of a doom and gloomist. And so yes, absolutely, markets gyrate. We'll have good times and bad times in the economies. There's no doubt about it. But a lot of times a reasonable top-down approach will help you do that. And then so one way that I learned how to do this is after I lost $300,000 in trading. And so what that taught me then ultimately is to look at the markets in a more realistic way, through a top-down approach. And so I'm doing a webinar today, July 25th. You can see it's going to happen at 7 p.m. Eastern, 4 p.m. Pacific. I'll show you exactly what my top-down approach is, how we do that, and how we get away from sort of the doom and gloomists, so we actually have a process of our own. So anyway, I just wanted to quickly let you guys know about that. And if you have any questions or comments, leave them down below and sign up for the webinar. It's going to happen tonight. And I'm looking forward to seeing you guys there. Take care.